not doing the tax prep, but doing the prep for the tax prep, right? So we wanted to make sure that a full year of bookkeeping didn't have any errors to it, right? First, what we look at is to make sure that everything is complete, right? So first, we want to make sure that we're sending all entities, all P&Ls for all entities, all balance sheets for all entities. I also like to send comparison for balance sheets so people see the capital expenditures, people meaning the CPA sees capital expenditures clearly, and just making sure that whole package is complete. So there's no additional requests by the CPA. The more back and forth, the more time spent. Then we like to go through each statement in detail, make sure that there's no errors. So for example, in your income statement, you have income expenses. On your income side, especially in real estate, you're going to have draws, you're going to have loans, you're going to have sales. We want to make sure that loans are not shown as revenue, right? Sales are netted based on cost expenses, or they're shown on the balance sheet so that the CPA can show a capital gain if it is truly a capital gain. So we want to make sure that we're not overstating income or even understating income, right? And causing a potential conflict during audit time. Also, depending on if accrual basis or cash basis, you want to make sure that your unearned revenue and deferred income is properly stated. So an easy way to think about that if you're on accrual basis is that if you have deposits received in December on a cash basis, that's true revenue. But on an accrual basis, that might not be recognized revenue until the next year. So you just want to make sure that is thought of during tax return prep as well. And then on the expense side, I think we see ask my accountant far too much, right? So that's usually the bucket that holds all. Accountant couldn't find the true category for the expense. We don't really want to see that, right? So what we can see in those ask my accountant categories or potential capitalized expenses, and we can see deposit, for example, that might end up being capitalized later. So you're pretty much overstating expenses there. And then just seeing any larger than usual expenses, we want to make sure that those expenses should not have been capitalized. So that's from your income statement standpoint. And then on your balance sheet, we want to make sure that the balance sheet properly shows the capitalized expenses and properly portrays that to the account, right? So a comparison report from prior period allows accountants to cleanly see added capital expenditure.